Today, we are going to talk about investment in disruption. And before I proceed, please understand this and let's make this very clear. We're going to talk about a lot of sectors. We're going to take a few names of the companies. But please make sure that do not interpret this into any sort of a investment call or a trading call, because disruption is a very risky category. So we are this is more like an awareness session to tell you that this is also an investment option which is available, but then which particular stock to invest. I'll give you a few names, but do not take any live trade without checking your risk appetite and without reading and doing more research about that stock, right? And we'll definitely help you out. We have researchers over here, and you can always contact us after the session, and we'll help you out to how to do it, right? Now, starting with understanding actually what a disruption is. John Chambers, who was the executive chairman of Cisco, he said that at least 40% of all businesses will die in the coming 10 years if they don't figure out how to change their entire company to accommodate new technologies. So the fact is, technology is something which constantly changes. And if you see, there are there are not many technology stocks which gives out dividends, right? Dividend is a share out of the profit which stock delivers. Um, Coca-Cola, Vodafone, Verizon, for example, you take McDonald's and other companies, ExxonMobil, Chevron, they declare dividends. But a lot of technology companies, whatever profits they make, they try to reinvest it into the company so that they can keep working on their technology and keep upgrading it. So technology is something which is it continues to change, and if any business is not updating, we have examples of Nokia. We have so many examples. Those companies which did not continued to change their technology, to change their interface, they finally succumbed to death. And today, that's what we have to understand, and we have to learn how disruption actually works. So, if you see this, this was in 2008, the top 10 companies by market capitalization, and this was during 2008 when actually the recession happened just before that. And you will see the top 10 companies which ruled that time by the size of the market. So market capitalization is what? The number of shares, the total outstanding shares the company has in the market, multiplied by their current stock value. So if you see in billions dollars, ExxonMobil, PetroChina, General Electric, Gazprom, China Mobile, ICBC, and then followed by Microsoft, AT&T, but then again Royal Dutch Shell and PNG. So 2008, if you see the market value of these companies which ruled the entire stock market, these were the top 10 companies. And you see, most of them were energy, most of them were utility based companies. Yes, there was Microsoft, but then leaving that, mostly FMCG and utility companies, right? And then fast forward 10 years from 2008 till 2018, 10 more years. And I have deliberately took data until 2018, because if you see, after 2018, Tesla also emerged, and Tesla also went ahead and became one of the precious companies. But then we have taken data just till 2018 to show you a 10 years of growth, how the top 10 companies which basically belong to utilities and which basically belong to FMCG, their market cap was normal, but it got exceeded by the rising technology. So you see, Apple became a $1 trillion company. Later on, Microsoft also would become a $1 trillion company, then Alphabet, then Amazon, Tencent, all of these companies, Facebook. So you would see that technology ruled for 10 years. From 2008 to 2018, we saw a lot of tech stocks going higher. And that was the time also when the interest rates around the world in central bank interest rates were very low. Um, a part of a part of the risk is a lot of tech stocks, they tend to fall when the interest rates go up, is what we saw in 2021 and 2022 entire year, and even currently in 2023, that interest rates have been going up to a higher pace. The rate hike has been very aggressive. Central bank's benchmark rate has been around 4.75 to 5%. And that is the reason that why a lot of investors have started taking money out of the technology companies, and they would rather put money into bonds, which are giving them around 4%, 5% each. So the idea is it's all about the risk premium. Last 10 years or 15 years, we did not see rate hikes. We did not see a high inflation. What changed was from both ends. 2020 happened, is what was the year of pandemic, and the central banks around the world reduced the interest rates and injected a lot of cash into the economy, which later on would you see that created a sort of artificial inflation. But the inflation causes were even more. We saw a war between Russia and Ukraine that spiked prices of gold, that spiked prices of energy, and slowly and gradually we have started seeing now China is coming out after the lockdown, and there is an expectation that again there will be a surge of demand from the Chinese investors, and we might see inflation again picking up. So all of that combined, we saw a lot of people taking money out of technology companies. So if you see stocks like Amazon, Alphabet, Microsoft, Apple, all of these stocks have come down a lot, right? So that is also one other reason that why we are doing this session. Meanwhile, I tell you about disruption and would tell you about a few tech companies. You would also be able to see that how a lot of these top class tech companies have come down due to the high interest rate environment, right? So, and again, when we are talking about investment in disruption, please understand this that this is not a recommendation for another 1 week or a month or a year. Disruption stocks are basically futuristic stocks. So if you're putting your money in it, you are talking about another 5, 6, 8, 10 years, like that. So medium term 5 years, long term 8, 10 years. Think where Facebook was when it started in 2012 and where it is now. Think where Apple was in 1990 and where Apple is now. So these kind of things, this is what disruption is all about. So to give you an idea about how do we understand what is a disruptive technology actually, and it's basically an era sort of a thing, because if you see uh, the risk and reward is too high. And when we talk about a disruptive technology, we are talking about a radical change which comes to an existing industry. So if you talk about smartphones, smartphone changed the entire world the way we see it, right? It was such an impactful, such a radical change. Now everybody, whether you want a smartphone with $200 or $300 or $1,000, smartphones, every particular company has smartphones available. So smartphones was that disruptive technology. 3G, 4G, 5G technology happened. That's what disruption is about. It's like a radical change which happens to an existing industry, right? And it happens due to basically some sort of technological innovation. So if you think about even a telephone, when it was invented, it was a disruption. Electricity, when it was invented, it was a disruption. Automobile, cars, basically, it was a disruption. And when I say disruption, it basically means that a complete, absolutely different change that comes into an existing industry, right? So imagine when there were no cars and when cars were introduced, the cost of a car was too high. But then, because the world started accepting it, so the production increased, the productivity increased, the per unit cost came down, demand increased across all the sectors. And today we see thousands and millions of cars are being manufactured and sold. So this is basically entire economy today is actually going through a global transformation, a technological transformation. And today we're going to talk about a few of those areas, and we see that a few companies, if you can look at, and we'll also talk about the risk of investing into disruption, because nothing can come without risk. And this is a really important thing because uh, whether it is innovative industry or it's a normal industry, normal FMCG products. Just 1 second. Let me just switch off my cam. I think that way the audio would. Can you hear me now properly? I've just switched off my camera. I'm just trying to see if it gets better. If you can hear me properly now. Guys, if you can hear me properly, please. Yeah, okay, perfect. Okay. So I think I just keep my camera switched off, so I think that will be easier. The audio should be easy. But just in case, if you feel any issues, please write it on the chat, and I'll try to. If there is too much issues, I can refresh the session also. Right. So when we talk about disruptive technology, this is what we understand. And then now to give you a slight look at what other sectors are here in terms of disruption. Major innovative platforms evolving, underlying technologies is basically what disruption is all about. And a few names, a few sectors, and few industries which have been talked a lot about. So we are talking about something called artificial intelligence, something related to genomic revolution, robotics, clean power, blockchain, and there is also something which is, I mean, we don't talk about that much, but then cybersecurity is ideally not a disruption, but it's a very emerging trend. So again, we can keep it separate. But every time I talk about disruption, I always highlight cybersecurity stocks a lot because a lot of us, we believe in the digitalization, but somehow we never actually look into a lot of cybersecurity companies because imagine the amount of budget being invested by governments around the world to prevent identity theft, to prevent um, corporate espionage or any malware threats. It's enormous. It's in billions. So there are a lot of companies which work into cybersecurity: Palo Alto, Zscaler, Okta. So this is also one of the emerging sectors. Yes, I mean disruption to neatly define is more about a new industry at all. So that's why we have kept it till something which is very innovative, something which is very different. So we're talking about artificial intelligence, which includes companies which are related to cloud computing, companies which are related to Internet of Things or live streaming or mobile connectivity. This all comes into artificial intelligence and cloud computing. Needless to say, there are so many companies which are into cloud computing right now, including Amazon and including Microsoft. And there is something, cloud computing is not something which is it was talked a lot about years ago. But the point is, now there is Google, there is Amazon, there is Microsoft, which is already into cloud computing, and these are the top cloud providers, which are again, which have a very huge competition going on, and there are a lot of companies which are still coming in. Now the question is there a point where the fascination with the cloud computing ever fade? I mean, the functionality of cloud computing is that now when pandemic happened, so let me highlight what actually happened and why, how the disruption word actually got out in the market. When pandemic happened, uh, which were the companies? So if you use your chat options to tell me, and I think a lot of you must have noticed it. Which companies do you think got benefited the most? Give me the names. A lot of these companies you have already used. Imagine you were locked inside your house. Which were the companies you think you used most of the products for? Because those were the companies which got benefited the most during the pandemic. Give me a few names if you can. Use your chat options, guys. And I know it's a webinar, so you won't get much audio to speak. But then let's use the chat option and interact that way. I think that way it will be less boring for you. Okay, so I am getting examples. I'm getting names. I'm getting names like Zoom. Getting names like Facebook. Yes, Zoom. What else? What else? There was one more company which got benefited a lot. I think a lot of us have been doing that. Zoom was there, like Zoom, other softwares like Zoom. Yes, yes, team viewers. So e-commerce, Amazon, right? Netflix, right? Alphabet, Amazon, of course, right? So if you, the pandemic actually pushed the progress and the trend of these disruptive stocks in the market, and it something which we would have thought that okay, another 10 years it might take to come into the market. Due to pandemic, that progress actually rapid. It was so rapid, the transformation was so rapid that people were bound to think about investing in these companies, right? So yes, Clubhouse was something which also happened. Microsoft, Amazon, yes, there are a lot of people for Amazon, right? We a lot of people ordered from Amazon. People sat on Netflix and chilled, right? Then there was Zoom, there was Microsoft Team, there were so many OTT platforms, there were so many voice calling softwares coming in, there were so many company, Pfizer, Novavax, all those companies coming up with the COVID vaccines, they got benefited. And then there was something called uh, remote medical consultation. Imagine you cannot go out and you get a medical consultant 24 hours on the call. So there were companies which provided you remote medical consultation also. So it became a part of a remote lifestyle, right? You would sit at home and still continue to work without getting your entire day interrupted. That was the power of disruption. Through cloud computing, you would get access to your computer in the office, right? A lot of softwares you would use through cloud computing. So artificial intelligence includes all these areas, and it is only getting better and better. And we'll talk about a few companies, we'll talk about a few names here. And next is genomic revolution. Genomic revolution is also the language is DNA sequencing. And basically, when we talk about DNA sequencing, we are talking about um, something which is related to. So it's a next wave of innovation actually, and it's already underway. Basically, what is done is your genetic information is used to understand that how your body works on a molecular level, basically. So a human being, just as you, just as me, the if you we have to sequence our entire genome, entire DNA. This was done previously in 2003, and the idea was that by studying the entire sequence of our DNA, we could identify patients, what sort of diseases they might get, and then we can provide a therapy to that particular person with that precision, because now we have studied the DNA, we have done the sequencing of the human body, and now we understand that what sort of diseases this particular body is prone to, so we can provide a much more precise therapy to it. But the cost of doing that was around $3 billion, and it would take at least a decade to have that sort of computation. But now, if you see today, fast forward this 2023, we are looking at almost 20 years after the first thing was done. Now, if you have to do a whole human DNA sequencing, it happens in $600 and takes only a few hours. So, DNA sequencing or genomic sequencing is something what is a very revolutionary idea, and you will see a lot of companies now they're actually adopting this clinically. The volumes of doing this have actually increased. There are a lot of technological developments happening, there are a lot of scientific developments happening, and the idea is very simple. Whether you talk about uh, advancements in DNA sequencing or editing the DNA, or something which is also called as agricultural biology, even that. Agri- so there is something called agricultural biology. There is also something called agricultural pharmaceuticals. So there is so much of land where the productivity is not there, and there is so much hunger in the world. So there is a technology which can improve the productivity of the land also, right? So there are so many examples, and there are so many companies which are into DNA sequencing right now. And there are, the only thing is, because this is a emerging disrupted era, and these are the disruptive sectors, the companies which you see today may not show profitability at the current point. And that's why I said that there are disadvantages also and risks also when you invest into disruption. And I want you to hear very clearly when I talk about the risk. And I'll give you a way out also, that how you can pick your company and what sort of stocks you should be looking at. Next is robotics. So we talk about uh, the robotics part of the era. At this point of time, we see 3D printing is one. During the pandemic, I heard that a lot of deliveries were being done through drones, And we have seen robotics. Every time we used to talk about robots, everybody would laugh always, because robots were something which was always a fantasy. I mean, it was something that, oh, okay, it might happen. There will be a Terminator which will, destroy the whole world. But the point is now, because of the pandemic, again, that transformation which happened in the industry was so rapid that now we can experience robotics in our lives. There are drone deliveries, the rockets can, which go towards satellites, they come back, they can be reused and sent back, is what has Elon Musk been doing. So robotics is also another era, and it's another disruptive sector which you should definitely look into. Then followed by clean power, which includes use of renewable energies, use of electric vehicles, use of battery systems. And the idea of clean power is definitely, will go through some statistics, try to understand that how these areas are emerging. But there's a lot of emphasis on renewable energy now. There are companies like First Solar, Jinko Solar, which are responsible for manufacturing solar panels and generating solar energy. And these kind of companies also are now in the news. And again, fast forward another 5-10 years, probably we'll see this sector also growing a lot. And last but not the least, we have heard this so many times: blockchain technology. We're talking about fintech, we are talking about blockchain, we are talking about decentralized finance, or um, so basically blockchain technology. All of us understood that cryptos were the highlight in the pandemic. A lot of people, they started buying cryptocurrencies. But please let me make this very clear: blockchain as a technology is much bigger than a cryptocurrency, right? So if you believe in blockchain technology, it doesn't mean that you have to buy a cryptocurrency always. There are companies also like Louis Vuitton, Volvo, Amazon, Walmart. There are so many companies which use blockchain technology in their processes. So if you are a sort of a believer in blockchain technology, and I feel that blockchain is a very helpful technology. I mean, imagine it this way: that if you sip a cup of coffee and you did not like the taste of that coffee, if there is a proper blockchain system on that product, you could actually identify that the coffee bean which was used in your coffee, which city, which village, which field, which country that coffee bean, which plot it came from. And that's the power of a blockchain product. Louis Vuitton uses blockchain technology to ensure that there is no counterfeiting of their products, right? Walmart uses blockchain technology to ensure the food safety, the safety of their food devices and the raw material. So blockchain is something which is used by a lot of companies. Oracle developed entire blockchain channel for itself. So blockchain does not only involve cryptocurrencies; it is basically a technology that will be slowly taken by. It will be slowly applied by a lot of companies. So be very open to the idea of investing in those companies which are using blockchain. It only makes the process more efficient, right? Again, those who favor cryptos, and this is not a debate about for or against the cryptos. I can definitely give you a point of analysis where cryptos are going in and what's the idea. But then crypto as an asset class, it's very risky. So if somebody would had a financial goal or a conservative risk appetite, I would never suggest them to buy crypto for a long term and keep it. There are a lot of day traders who trade in cryptos. They put a stop loss and they trade and they make money, they lose money. But then it depends on your entirely on your risk appetite, that what sort of product you should be investing into. And that's a whole different session we are talking about. But yes, now, beginning with AI or artificial intelligence, as we started with, uh, the pros and cons are very simple. But then when we look at the pros, we are talking about a faster response. We are talking about a large amount of data being comprehended so quickly. So within artificial intelligence, we get data science, we get machine learning, and all of these things which actually kind of stimulate the human behavior. It studies it, and it comprehends a huge amount of data real quick. And at this point of time, data analysis is something which has recently emerged. I'm not sure. I'm sure actually a lot of you must have heard about data science and data analysis, and that is something which is a part of artificial intelligence. yes, if you look at the disadvantages, legal, ethical concerns, um, the application of data science or machine learning in a product, it might add on to the cost. But the point is, guys, any new technology, when first it comes in, it is costly. But as I said, that when the masses started applying it on their process, the per unit cost reduces and eventually it becomes the new trend. So that's the basically the idea of when we talk about artificial intelligence also at the moment. Maybe currently you're thinking that, okay, how can, tell me if you have heard about this, and you can also Google it, because I read it about this today. McDonald's have actually launched a store without the employees, and it's first largely automated location. And I think it was, I read about it today, but I think it was back in 23rd December, somewhere around. And that's what it was. Even on 4th January, we saw in Texas, they opened an automated restaurant. And this has been going on. If you see, a lot of times, if whether there are supermarkets or whether these stores, you will see a lot of these companies, they have started automated stores with zero employees, and just it's a very different experience altogether, right? So already a lot of companies are doing it now. At this point of time, maybe the cost of this is high, but slowly other companies, when they start pursuing this, you will see that the cost of all this will start coming down when the production becomes the higher, right? Because driverless cars still at the moment could be a very costly idea, but then now more people coming in. So was electric vehicles, right? Electric vehicles were designed in a very weird way, but Tesla redefined it. Tesla started making masks, and then Volvo entered, then Mercedes entered, and Toyota entered, and now so many different, even Hyundai or Honda, all of these companies now they're actually entering into this sector, and now you will see lot of competition coming in, and the prices of electric cars also will start getting normalized. So basically, every new technology, first it's expensive, but then when it is applied to masses, again it becomes a new trend. So if you see the global AI market at this point of time, uh, the revenue, which is 643 million, it was in 2016. It is expected to go to $36 billion around the world in 2025 is what is expected. And we are talking about the major usage of AI into consumer products, into business services, advertising, finance, media, investments, defensive applications also. And that is something, again, we have to see, because whether it is about image recognition, whether it is about advertising. Now if you see, if you're watching a football match in different countries, and if it is being broadcasted from different countries, you would see that the advertising in every screen is different, and that is not done with any external tool. This is done with the help of softwares and AI. So advertising market is also a big industry which is going to be impacted. So consumer products, finance, entertainment, and there are a lot of these companies which are involved into AI. And you will be surprised to know that if we talk about AI stocks, or the artificial intelligence stocks, uh, throughout, whether it is 2022 or 2023, whether in India or here or any other company, there are so many companies which we already know have existed, and they are actually getting into this. So I'll just give you a few examples while we are only talking about it, because there are such companies. I mean, even in India, if you see Bosch or Persistent Systems or KPIT Technologies sort of companies, if you see globally, because globally again we have seen a lot of input from a lot of companies. If you see companies like Microsoft, or if you see, for example, companies like Alphabet or Nvidia for that matter, or CrowdStrike, for example, so many companies which are involving into IBM for that matter. There are so many companies, big names, good names, and if you invest into those companies, you kind of are already uh, reducing down your risk, because these are quality names. So ahead, when we go towards the presentation, we'll also get to know what are the disadvantages and how we can make sure, or not make sure, basically how we can protect ourselves against any sudden falls, right? So moving on, we understand clean energy is something which we talked about, right? So just to make you make very clear here, 39% clean energy is projected to power 39% of US utility capacity by 2030. In 2020, it was 13%, and by almost 39-40%, it is projected to power 40% of US utility capacity by 2030. We're talking about another 6-7 years. Similarly, if you talk about cloud computing, because cloud computing is something in the pandemic, it took uh, it basically the stocks related to cloud computing skyrocketed, and we saw around $400 billion is the worldwide cloud spending. So this is basically in 2022 when we said that it's going to approach $400 billion in 2022. And then electric vehicles, future transportation. Again, as we have seen, the global electric vehicle sales is expected to grow 10 times by 2030. So, and we have already started seeing that so many competitors, now it's not just Tesla anymore. You take names, BYD, which is Build Your Dreams in China. Then there is Lucid Motors. Then there is Toyota, which is coming up with a much efficient battery than Tesla. Then there is Mercedes, there is Volvo, there is Hyundai. Even in India, the electric vehicles have started pumping in. So the sale for EV sales is expected to grow 10 times by 2030. And again, these are the areas. One thing also which you should understand, when I say the EV sales are going to go up, you don't just take your money and invest into a company which is making an electric car, but you think about all other sectors also. So disruption is not just about one specific sector. There are a lot of themes connected to that. So if there is an electric vehicle made, there will be increase in the electric vehicle charging stations also. There will be increase in the recycling of the batteries also, which are used in those vehicles. There will be an increase in those companies which create packages for packaging these batteries also. So all these are companies which are connected to one specific theme, and that is electric vehicle sales, right? So there are so many companies layered into these different sectors. So that is the idea, guys. So for example, if you are not able to invest into Apple, and but if you expect that iPhones are going to be produced at a higher pace in the future, then you can invest into a company which provides Gorilla Glass to the Apple, right? iPhone has the Gorilla Glass. Corning Inc. is the company which used to make. So instead of investing in Apple, you could still invest into that particular company. Like that, when we talk about EV as a disruptive theme, we also understand that there are a lot of layering sectors attached to it. So electric vehicle charging stations, electric vehicle infrastructures, electric vehicle, the batteries which are used in the vehicles, the packages which are used to transport them, and then the companies which recycle them are also part of the EV sales. So we have to identify all those companies also while we're investing, right? And then there is something called digital health or remote medical consultation. This is also a sector which has been going on. So 160%, the digitally connected healthcare market is expected to grow to grow 160% from 2020 to 2025. And this was all of us have, unfortunately, we have seen that during the pandemic how difficult it became for us, for our friends, family, a lot of people to actually even go out and see a doctor. Hospitals would be very careful. So during that time, the medical consultation, the remote medical consultation, or digital healthcare, keeping a track of your heart, keeping a track of your health. A lot of these companies, they try to digitize your health records, and that is something which is going to be so useful if this is combined with blockchain. Imagine that, and a lot of companies are working on that. So as I said, that the technology and the innovative sectors only become better and better. Yes, there are pros and cons both, but then once the trend establishes And once the masses absorb it, you see that the cost of that technology plunges and the production increases, and that's how we see the revenue generating in those companies. Now, coming next, as I said, that we are into the era of digital transformation, and there is one specific sector which has been talked a lot about, and now it has become actually a very important part of our lives, and that is semiconductors. Semiconductors, these are a very important component at this moment, because whatever I am talking about, I'm talking about artificial intelligence, I'm talking about machine learning, I'm talking about e-commerce, I'm talking about digital media transformation, cloud services, software as a service, fintech, blockchain, digital payment, electrification of the or driverless cars, technologies which are related to driverless, 5G, cyber security. What is the future of work? Everything is connected to semiconductors. And do you know where this maximum semiconductor comes from? Can anybody find this out for me? I'm sure by now I can still see a lot of people are still here, so I'm assuming that you're getting some information. Tell me, what do you think? Where does the maximum semiconductor comes from? Who is the largest producer of semiconductors? Think or find out. I mean, even if you Google it, that's a win. China, Taiwan, perfect, Southeast Asia. So the point is, China and Taiwan, these are one of the largest producers of semiconductors. So there's a company called Taiwan Semiconductor Manufacturing Company. Most of the semiconductors chips come from that particular company. So you understand the significance of that, and now you understand how significant semiconductors are. Now tell me, how many of you have actually invested into a semiconductor company in terms of your portfolio of stocks? If you have done yes, if you have not, then put no. Tell me, guys, how many of you have invested at all into a semiconductor? Okay, no, 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 no. Okay, 1% said yes. Okay, perfect. No, no, first time I'm hearing. Exactly. So the idea is, guys, this is why these sessions are done. Again, so I'm not, please let me be very clear about this. I'm not telling you to exhaust all your savings and start investing to semiconductor stocks, because, as I said, a disruptive era or a disruptive sector is something which is also a very challenging and riskier sector, right? But you should be aware that there are this is something which is future. If not in the next year, the next 5 years, we'll see these trends coming in, and a lot of semiconductor based companies, because semiconductors now are used for literally every transformation I just spoke about, whether it is blockchain, whether it is gaming, whether it is cloud, whether it is fintech or electrification or driverless cars or cybersecurity, AI, everything requires semiconductors. And there are a lot of such companies. So if you look at NVIDIA, for example, or Intel, or Taiwan Semiconductor, I just said, look at companies like AMD or Texas Instruments, Qualcomm, for example. All these companies, these are available. You can do your research on it. You can check. Qualcomm is one of the companies which is based in US, and it's also a semiconductor. Intel, AMD, these kind of companies are also there. You need to have a proper research done on it, and then if your risk appetite is there to invest into these sectors, calculate your risk, and then only make this a part of your portfolio. But this is just for you to understand that how progressively the world is changing and what is behind it. So semiconductors is something, I'm glad that a lot of you are here today to understand this, because literally every new transformation which you know will involve semiconductors in the future. So start looking into those companies. and see. Right now, next, while we are having a look at it, how do you basically invest into this disruptive era? So I talked about shares. I talked about what are these eras. So we talked about artificial intelligence, which includes cloud computing, which includes machine learning, data analysis. Then we talked about genomic sequencing, DNA sequencing, which includes stemming of cells, which includes CRISPR technology. Then we talked about blockchain, which includes fintech, digital payments, mobile payments, everything. And then we also talked about uh, clean energy as a disruptive era. And we talked about that how semiconductors play a really important role in all of those transformations. We talk about robotics, how significant robotics can be. Because see, even in robotics, if we see earlier when we used to, as I said, when we used to talk about this, people were less willing to engage with all of this. But because COVID happened, it kind of uh, we got used to the idea that maybe it's not the worst thing to be involved into technology. And this is a living example. We all of us, all everybody here, 85 people right now, all of us, we are in a webinar. It's a webinar. Probably a few years ago, we don't even would be into these webinars. We would want to go and meet and understand. But now to save time, and because we are so much aware about, it's so easy to get connected. You click on a link and you can basically hear and do your job, and it saves your time. So we are getting used to the technology, right? So robots are taking a lot of work environment than expected. And again, as I said, once the technology becomes easily available, I keep saying this because talk about or think about those countries which have a higher aging population, and the countries with a higher aging population will also demand a lot of health monitoring. It will also demand a lot of self treatment, right? Especially amongst the elders. So imagine what the robotics sector can do in that era. And this is something this in that area, what it can do. So this is something which can, again, it's a game changer when we see, right? So while we are talking about it, how to invest into these sectors, you can do through individual companies, right? I can find out a company which does DNA sequencing, or a company which is involved into remote medical consultation. So these are individual companies you can look into. You can base pros and cons. You can see what is their earnings, what is not, how volatile, how fluctuating it is, how much it moves. And then also you can invest into these sectors through funds or baskets, which I feel is a better way to do it, because uh, since this is one of the riskiest, and I'm not afraid to say the word because that is what it is. It's all about risk and reward, guys. So let's not sugarcoat this. Disruptive sector is one of the riskiest sector also. Yes, as I said, that as the time progresses and when it becomes trending, a lot of people who would have invested in the earlier can get a lot of gains. But then if it doesn't work, then you can lose your entire money. So you have to be very careful what part of your portfolio should be into this disruptive sector, right? And in which form. If you pick out individual companies, and these are fairly new technology companies, or they are fairly new companies which are still struggling to earn an income, but they are doing a lot of research, because these kind of companies, whatever money they make, they put back into research. So these are growth companies, right? So that's why when you target on these companies, or when you put your money on these companies, you are always at a risk of either making it too big, or to win too big or lose too big. So that's why I feel that we should always try to target a fund, basically a exchange traded fund which you can see on your platform, or a sort of a basket which gives you exposure into that particular theme also, but do not restrict you into one particular company. That tomorrow, for example, let's say we are looking at space exploration, for example. Elon Musk keeps talking about going to Mars. Everybody keeps talking about going to Mars, forming Mars colonies. We saw Virgin Galactic taking a flight towards space, and then Jeff Bezos, and then Elon Musk. But the point is, if I would invest, so recently, I'm sure a lot of you must have read this news about Virgin Galactic, which recently happened, and this was, I don't think it was long ago, because this was something. If you see Virgin Galactic, the spacecraft, it made its first glide and it went for space. But the point is, again, if we put our money into one specific stock, then what will be the outcome of that? Because that is something which is important. If space exploration did not work, like for example, whether it is about Virgin Galactic or about Tesla or any other particular company, if it did not work, then what is going to happen? So that's why if we have to invest into this sector, we should do it with a fund, because in a fund, there will not only be space exploration companies. In a fund, there will be companies which are into space exploration, but then when the rocket goes to the space and comes back, the companies which recycle or repair those rockets so that it can be reused, even those would come into that fund, right? So in a fund, when I speak about a fund, you can get a better exposure to different companies, which can give you an exposure to these layered sectors. And there are a lot of ETFs, there are a lot of such funds which are available. But as I said, you have to be careful that these are not prone to any sort of safety. This could go very risky for you also. It could be very rewarding for you also. That's why you allocate a smaller part of your portfolio, and that also through ETFs and share baskets. Share baskets also, they just work like ETFs. So I'm just showing you few funds over here. Smart Cities Index, Aging Society Opportunities Index, Renewables and Energy Efficient Index, Clean Energy, Sustainable Water Transition Index. I think at this point of time, we should all agree that the most important commodity in the world is water. Write a yes or a no if you have invested in water, in a water distribution company, in a water purification company, in a water transformation company. If you have invested in water in any sort of investment, yes or no? Okay, I got one yes, and I'm happy about it. But a lot of no's, right? A lot of no's. So the point is why we are having this session. Again, every time I try to highlight this thing, like Diva and ADC. So Diva is a utility company. I wouldn't call it a specifically water company. It's a utility company. Just like how a coal power is, right? So, for example, and good, somebody just highlighted here that if you're investing into Diva, will it be counted as a water company? Uh, it is a utility company, but I would be more inclined towards if when I speak about that investment in water, investment in water should be more about when we are talking about, and I'll give you the name of the few companies also. So basically, the idea is that those companies, as you rightly said, the business which is closely tied to water treatment or irrigation facilities, for example. Diva is one of those examples. That is true. It is a utility stock also. And at the end of the day, we are also talking about water distribution or water purification companies, right? That is also something which is available. So there is a company called American States Water Company. There is a company called American Water Works also, and there are a lot of such funds also which are providing you a diversified exposure in all these water companies. But yes, utilities which are connected to water makes a lot of sense, but not just to only electricity, because electricity, to be fair, can be replaced by a lot of renewable sources of energy, right? But water cannot be replaced by another water, I'm assuming. This is what I feel. But that's why I hope at this point of time you understand that how important it is for you to invest into water funds. But please, as I said, do your risk reward first, understand your risk appetite, take the help of our consultants, and only then, or any other consultant, and only then try to look forward to invest into these areas. I'm talking about cyber security, I'm talking about future mobility, next generation, blockchain index, these kind of funds which are also very easily available these days, right? And next, as I said, there is something called a share basket also. And share basket themes, And guys, before we end this session, let me just tell you also the tomorrow session, which I highlighted, that a lot of women investors can come and join this. So if you have someone, but also if you want to yourself, not just very women oriented, but men and women both are invited on this. Yes, we definitely do a lot of sessions on Women's Day for our female clients, a lot. But then again, since we are doing a master class, so I don't think this should be restricted to anyone. Anyways, it's a webinar, so men, women both are allowed. But I would really appreciate if you take time and make your wives and daughters sit, and along with that, you also sit and understand what's going on, right? So coming back, the share baskets, when we talk about it, it works just like a fund, but now these baskets have been talked and created by the brokers after pandemic. So if you see a basket which is related to remote lifestyle or collaborative technology. So to tell you more, when we talk about a collaborative technology, right? Because there are so many baskets these days which have been created, and what sort of companies you get exposure to is something which is really important. So whether it is software as a service or renewable energy, or we talk about, as I said, uh, big tech sort of companies. So one, there is such basket called software as a service, right? In those, we put companies like Mastercard, Microsoft. Then there is Trade Desk, all those of companies. So when you buy that basket, you get exposure to all those companies along with that theme. So gaming, mobile payments, cyber security, 5G, software as a service. You When you invest into one basket, automatically you're invested into all those 20-25 companies with a different weightage. So that reduces your risk of a failure in one particular company. Correct. So that's how basically you invest into these disruptive sectors through share baskets and through ETFs. Now, these are few names which I would suggest you have a look at it, because Zoom video communications, at this moment we have seen that share prices slightly went up, but if you see the 52-week high and 52-week low, it's very close to the 52-week low at the moment. But Zoom videos is something we all got to know about it during the pandemic. We used it. We are still using it. I'm sure a lot of you are still using it. And we have seen 3 days ago, we saw stock went down slightly. But again, Friday, we saw a slight movement in the stock on the upper side. It's not moving much at the moment, but during the pandemic, it went to 300, 400 also. So we have seen that the stock price is capable of moving a lot. But now the point is, there are a lot of things which are still happening uh, in terms of when we talk about potential. The company still has a very strong potential, and at this point of time, obviously, it is too soon to say, because the stock just slumped to a 52-week low. So a lot of stocks I'm going to talk about right now, the another two, three stocks also when I'm going to talk about, because of the high interest rate environment, we have seen these stocks are tech stocks, they have come down also. So whether it is PayPal or Facebook or any other companies, we have seen that they have come down a lot during, because of the high interest rates. But then again, as I said, that we are talking about a futuristic part. We're talking about companies which have a good potential to move in further. So, and these are growth stocks, right? So again, at this point of time, the stock is at a lowest. But when we look further and when we see the profitability part of it, the another few years are expected to be slightly profitable for the company. And that is why we have put it here on the watch list. So keep a watch on this stock and see, because a lot of times good companies also, like Amazon, is also available at a pretty good discount. Microsoft at this point of time is still riding high. But you see another company which is called Teladoc Health. Again, if you can see the chart, it used to be way higher than what it is right now. It's down to $26. The lowest has been 21, highest has been around 44. And again, Teladoc stock is all about remote medical consultation. So basically, the idea is that this was one company in pandemic. Now, once this session ends, if you go back and see the entire stock during the pandemic, it skyrocketed. So I'm talking about like back in 2020, if you see around, let's say it went around $300 per share, and now it has come down to 26. But because we are talking about disruptive as a sector, that's why we are talking about this particular company. The results of this company at this point, the quarterly results were actually better. It improved, and it has received a lot of upgrade from a lot of analysts also at this point of time. Outlook for the future in the coming next 1 year is still disappointing because it's more about virtual healthcare until the technology becomes more and more acceptable. But then 4 days ago, the stock jumped around 4 to 5% after beating the first quarter outlook. So, as I said, this is not these are not companies which you're talking about, that's going to jump in the next 2 months or 1 year or 2 years. We're talking about futuristic investments. These are already at the lowest point right now because of high interest rates and because of what has happened to the tech stocks. And that's why we are just having this awareness session about that these are some companies which probably have a good potential in the future to move on, right? Now I'm putting some good names into it: Microsoft and Texas Instruments. Texas Instruments, as I said, it's an undisputed leader in the global semiconductor market, right? So it shares around 20% market share of semiconductors. Now, why I'm putting Microsoft and Texas along with Zoom and Teladoc to give you a perception that the most important part when we talk about investment in disruption is the disadvantages and the risk behind it also. Because what happens is that not every new technology, where there's a big risk when it comes to investing in these areas, right? Like, for example, let's talk about Uber, for example. I am sure everybody knows Uber, right? Uber was a such disruptive stock. But then what happened was with Uber, competition increased, Lyft, now in India, Ola, Didi, all sort of different providers have come, right? Now what happens is disruption may provide you a short-term advantage, right? And gives you supercharged growth to your stock, and you're like, okay, this is something which is next. But then we have seen healthiest of the firms which are in disruptive industry, they finally came down because of the increasing competition. Because what actually happened was, because the company which does the disruption is expensive, so it clears the path for other companies to quickly catch up, and then the cost per unit cost of all the products starts coming down. So the successful disruptors in the short term, they have eventually faltered on the back of competition because due to law barriers to the entry, right? Uber was this example. But that is another reason. Now I'll give you one more example why I told you this. Because not to scare you from this, of course risk is always there, but there was one other company which used uh, its original content and still disrupted the industry, and that was Disney. So if you see, Disney has kind of piggybacked disruption in a very sustainable and a very profitable way. Because what Disney did, it kind of pivoted from this old world to the new world. But how they did with this, they have this huge, great content and intimate knowledge of the customer, and that's how they transformed everything. Now, if you see, Disney is one of the most profitable stock. Every dollar they put into the business is generating a very high return, right? So it's not necessary that all disruptors are not good. Amazon is such a great example, because when the earnings were coming through and the cash flow, that particular time people thought it might not work, but then it started working, right? The only point is the hit rate is very low. So that's why you stick with the high quality firms. If it comes to cloud computing, if it comes to semiconductors, pick the quality names. And I think that should be the idea. You pick more and more quality names, and that actually helps you to not only take exposure to the technology, but also reduces down your default risk, right? So if I'm talking about artificial intelligence and cloud computing, rather picking on a new company, if you see Amazon and Microsoft are already doing it, then you pick that in your portfolio, right? If we are talking about space exploration, do it through a fund. If you're not doing it through a fund, uh, be close towards SpaceX or Tesla, because they are the pioneers at that point, But again, one company exposure will always be risky. If you talk about, let's say, semiconductors, Texas Instruments or Nvidia, bigger names, quality names, right? That tomorrow if the sector doesn't work, then these companies also may not get very hugely impacted. So the idea behind disruption is, guys, invest, stick to the quality names, and that is the reason that why you need to talk to your risk consultants also, and they will tell you that okay, you pick this name, because at the end of the day, a lot of these companies are tech. They may not show you a future earnings growth or a compounded annual growth rate like normally we see in a lot of companies, but at the end of the day, as I said, we are talking about another next 5 6 years, right? So if there are quality names which are already providing you, because there are a lot of normal companies. So Aurora Spine, for example, it provides spine surgery products, right? And again, that is something that takes less than 1 hour. The patient does not even need to stay at the hospital or any sort of rehabilitation, right? Has like very game changing products again, uh, and they have got the FDA clearance in the last 12 months. They're still in a very early stages of commercializing their products. So now Aurora Spine is one. But if you see the total balance sheet, if you see the future growth rate, you may not find how much revenue it has built, but the technology is insane, right? Aquafil, for example, is one of those companies. Basically they produce nylon. It has an environmental impact, also the use of petroleum, also. But then again, as I said, because they provide Aquafil actually provides a very sustainable nylon, and they reduce the landfill usage, they reduce the global carbon footprint. I think that is one of the best companies you can invest into if you're looking for a nylon based company. But again, if you start reading the balance sheets, at this point of time, the company is profitable. But at the end of the day, if you see the future growth rate, you may not find it. But that doesn't mean the company is bad. Such as Arcade Quantum, such as Else Nutrition, a lot of these companies are already there. Eve Holding is something which is a eVTOL company. eVTOL is are basically electrically powered vertical takeoff and landing aircraft, something which could transport people and cargo in the near future. So it's again a very massive, attractive opportunity of the sector, right? So more you talk to us, definitely we'll sit with you and we'll explain you how these kind of stocks work, how these kind of industries work. I hope today a lot of you got some information about what disruption actually is. And I only hope that the participation in these sessions increases. Tomorrow, Ms. Deepa is going to do a very general session on what's going on in the market and how you can invest, how you can trade in the market. And I hope that you join the session tomorrow. Day after, it will be Mr. Vivian who will give you a lot of insights about technical analysis, technical charts, and finally ending the series on 4th of May. It will be me giving you about how you can trade live, a live demonstration on the platform, what sort of strategies you can use to invest, arbitrage, pair trades, bond portfolios, and a lot coming next to you, right? So thank you so much, guys. Thank you so much for conducting this session. If you have any questions, please write this here. I can take another 5 10 minutes to answer any questions if you have. Uh, can you tell us any other disruptive stock? Sure. So basically, there is another company called, again, I'm just right now keeping you more aware about a lot of these companies, not recommending you anyone, right? There's a company called Hardbeam, for example. Hard beam is, so we all know that the early treatment of heart attack basically it reduces the degree of harm which happens. So when we rush to the hospital and if we are experiencing any chest pains and if it is cured, then obviously the later impact is less. But if you see stress or heartburn when it happens, these kind of things also create similar symptoms, right, as a heart attack, and sometimes it's a false alarm. And emergency rooms are typically equipped with ECG devices, and those aren't very accurate, and it's a very lengthy evaluation process. Now, hard beam, how does it work? Is, I mean, it did not it didn't invent a very big standard for heart attack detection or anything. Like it basically offers you a software for a vector ECG to basically to detect multiple heart conditions, and it's the device is like the size of a credit card, right? And it's called Heartbeam. The FDA clearance has not happened yet. It is still pending because it's like a remote health application, and that is something again that this particular company has a recurring revenue model for both the devices. But then again, these devices which will be worn by the patient, it has to be monitored by a prescribing physician, right? So as I said, there is still a lot of companies which are already there. A lot of these companies, they do not generate profits. They have been out of favor also during this time because interest rates have gone up, so they are also not performing that well. Eventually, when inflation will be tamed, and when they are near that point, then you will see the change happening in all of these sectors, in all of these companies, right? We are talking about a big industry of disruption. So that is that. Okay, thanks. Very informative. Thanks. Yeah, would you consider Amazon, Facebook, and HDFC Bank disruptors in their early days, like 1997? Amazon, definitely. I mean, yes, Amazon was a big disruptor because e-commerce. I don't know how many of you actually use Alibaba at this point of time. I know a lot of people in China would use, but Amazon at this point of time, Amazon changed the way e-commerce works. And at this point of time, it's not just an e-commerce company anymore. It's getting into cloud computing and Amazon Web Services also. But yes, Amazon was a disruptor, and so was Apple, by the way, because at that point of time, when iPods happened, or when smartphones came, and that particular time we saw that Apple also became a big disruptor at that particular point. So, and even when we see HDFC with the fintech footprints they have put, that is basically it's changing the world. It's bringing a digital revolution at that point, right? So again, that is there. I mean, at this point of time, a lot of companies which are today, which may not seem very profitable, will be the disruptors of tomorrow. And that's why this whole session is conducted, to keep you aware about, while you're investing into known names and bigger names, and sometimes only per hearsay, there are a lot of these companies which you not hear about because basically they're not in the they're not in the media, they're not in the news. But let's take a moment and start understanding that there are few things which people need, right? Today, what is the most significant part? Sizing up the semiconductors, right? And how would you feed a hungry planet? The global population is projected to grow roughly 20% to 10 billion people, I'm sure, in the next 25 years. And the growth of the middle class in these developing countries, it will require 50% more food than the world is actually producing today. And then there is climate change happening, which is having a very negative impact on the population. Wheat, rice, maize, soybeans, they are not, the production is not enough. So there are innovative solutions for increasing food production also. There are companies which are into something called precision agriculture. And they use a lot of data, drones, sensors, automation, just to optimize farm efficiency, productivity. So every single acre of the land can produce higher yields, use less water, because agriculture creates the highest demand for water. Making food production more water efficient will only leave more water available for drinking. And that is the idea of the disruption, right? So that is something which is there. View on defense sector stocks. Absolutely. I mean, defense sector as in arms and ammunitions, of course, because unfortunately the world is not getting any better. So a lot of disruptions, a lot of technological advancements happens on the arms and ammunition industry. Defensive sector, if you're talking about utilities, and yes, there are a lot of quality names which you can always look into. At this point, because bonds give you 5% yield, it's actually investors do not find really good to invest into tech stocks because of the high risk, so they stick with defensive sector stocks and earn good dividends. But there are a lot of tech companies which, because of high inflation, have come down to very good levels, so you can always look into it. Right, guys. So perfect. There's one more thing, I think. Somebody said was a good point about agricultural precision agriculture. Absolutely. I mean, the need for clean drinking water, it's already critical. by 2030, if you see the gap between the demand and supply of fresh water, it is expected to reach 40%. And to close this gap, a lot of analysts, researchers, they forecast around $1.4 trillion will be invested in the next few years to only expand and improve global water infrastructures, to treat, transport, conserve water, right? So this is something, there are a lot of innovations happening in this area, and there are companies which are doing it. So I think that is something which you can look into. Disruptions in the agriculture sector, yes, as I said, there are companies in the agricultural sector also. And again, as I said, these are the names which have been there for a while. And if you start looking at it, I'll give you a few names at this point, and if you want, you can do your research also in that, because there are a lot of disruptive technology and there are a lot of disruptive companies also. And a few companies, they have not even been listed at this point of time, because there is something called indigo agriculture. It's not a stock at the moment, it's just a company at the point, and basically the IPO is much awaited, but whenever it happens, I'm not sure. But the IPO is much awaited, and like that indigo agriculture, there are a lot of other companies also. So you imagine any company. So I'll give you an idea. Any company which is manufacturing drones for crop monitoring and providing those drones will also become a disruptive agriculture company. You see it that way, right? So you can invest into that also. So like that, there are a lot of other companies also, guys. And if you have some time, let me know. Let's sit one on one and discuss more about this whenever you get time. As I said, that these are free of cost awareness sessions, and we want to make sure. I think there was a question in the beginning, that how did pandemic exactly expedite the development of this technology? Injection of funds by the governments around the world. So what happened was, it's not just because of the injection of funds by the government around the world that happened, but also the need for us to communicate with each other expedited the development. Today, my father knows how to Zoom, and my father in last 30 years, he never understood and did not want to understand the technology behind Zoom. But now, because during the pandemic, it became one of the important parts of communicating, bringing everyone together on a call, celebrating birthdays together. Yes, it expedited the progress. So that's what it was, right? So perfect. Thank you so much, guys. Thank you so much. I think can we call? Yes, you can always call me. You can always connect with me over emails, phone calls, whatever you guys. Please, if you have any questions, let me know. You can come to the office. We'll have a discussion, and we'll meet soon. Again, from tomorrow, Ms. Deepa will take care of. After that, Mr. Vivian, and then May 4th, I'll meet you once again and give you more information about the markets, what's going on. So thank you so much for sticking throughout this session, and everybody who came. I can see the numbers, still a lot of people still here, and thank you so much, guys. If you have any questions later on, please do message me or reach me out, or let's meet in the office, have a cup of coffee, and discuss this further, right? So my name is Yogesh. Thank you so much. You have a great night ahead, and please come tomorrow for another session. And let's continue with this week till 4th of May, and let's make this series much more informative. Please share more and more ideas and thoughts if you like this session. Right? Thank you so much.